Hello and welcome to another update video about ADA. So ADA, yeah, continues to be below this descending trend line. I gave you an idea yesterday of a micro count here of a triangle. That worked out so far. Let's see if that's something sustainable. So we're going to zoom in a minute. The high level assumption hasn't changed, so we can nearly skip that. Just want to mention it for the benefit of new viewers. So yeah, we looked here off the December lows for, we're looking at a 5-wave impulse to the upside into the February highs, early February. We then came down in what I believe is an A wave. So the first wave of a corrective wave pattern ABC. Corrective wave patterns are correcting the impulsive price action, which happened before. So a corrective pattern consists typically of 3 waves. And we had here the A wave of the ABC structure, which is corrective. We had here a B wave. The B wave can overshoot the beginning of the A wave in some circumstances. In this case, I believe those circumstances are given. And then a C wave to the downside in 5 waves, which could be nearly complete and reached our target area that we defined already 4 or 5 weeks ago. So I'm really happy with that we went there. There was in between the possibility to move up first and then come down, but just basically to take a diversion, same way that you would if you drive with your car, you can take 2 different routes. But in the end, the destination was given, so we arrived there safely without accidents, hopefully, and we're now there. So it's just time to wait for the next train up north, right? That's what we want to wait for. And this is basically the destination where we can turn around. The market may have turned around already. However, it currently looks like it needs one more low. Yeah. So if we look at the micro count here, we followed very nicely this descending trend line. You could probably make a descending or an impulsive channel out of it. What is? Let me just think about something. No, that's fine. Yeah, 5 waves down. So we want in the C wave, we want 5 waves down. And we're doing that at the moment because we have a wave 1, we have a wave 2, a 3, a 4, and a wave 5 nearly complete. There's a bit of difficulty in counting the subwave structure, but I think I found a good way in that we consider this 4th wave as a triangle. And of course, waves 4 and 1 are not allowed to overlap in an impulse. First of all, that raises the question, is the 5th wave here actually an impulse? And if it is, they can't overlap, that's true, but you can make the case that the A wave of a triangle, of the A wave of the wave 4 is allowed to overlap with wave 1, as long as the end of the wave 4 doesn't overlap with wave 1, okay? So that's actually fine. And what is interesting, let's just draw the fibs. Let us just draw the fibs for the wave 4. You can see that we actually ended this wave 4, yeah, in the ideal target area. Let me just do that. No, maybe not. 1 second. No, we didn't. Okay, forget about that. Because normally you would expect a wave 4. Yeah, so it came down in the 3rd wave. It moved up in a 4th. And it did not, at least this E wave, yeah, did not end in the ideal target range of a 4th wave. So ideally, the 4th wave should not go beyond the 50% level. Now, that doesn't mean the subwaves can't go beyond, but certainly the end of the wave 4, which in this case is the E wave triangle, should ideally not end above, in this case, above the 50% Fibonacci retracement, yeah. But it's not against the rules. So in this case, in the absence of any other counts which would explain this better, in my opinion, I'm counting this still as a wave 4 triangle, because there is not another best way of counting. I mean, I can look at this maybe as a 1-2-1-2 setup, but then so far it's failed to follow through to the downside. So I like the idea of a triangle here, which I gave you yesterday here, highlighted to you in the apex. Expect some kind of an impulse, or at least a move to the downside here, which then occurred because you would expect a triangle to break to the opposite of the E wave, right? Triangles typically consist of 5 waves. The few things to watch out for in triangles. Each of these subwaves is corrective. The E wave, for example, can be a triangle itself. That's something to watch out for. The C wave is normally a more complex one, or it can be at least a more complex one. Certainly not in this case. And in this case, it looks like a contracting triangle. even though I've got another idea here that I want to talk about now. But yeah, this is what we need to watch out for. The E wave can never go above the C wave, never, never, ever. However, the E wave can go above the AC trend line, but must not break above the C wave. Very important. Would be a very clear rule break, okay? In a contracting triangle, it can't. Yeah, but that's sort of where we are. Now I've got an idea because, as I just said to you, in terms of these retracements, it's counting it that way, the fourth wave did retrace a little bit too much, or the third wave did retrace too much in the fourth wave. So I'm considering actually a slight adjustment of the triangle and make it, instead of having it as a so-called contracting triangle, we might want to consider it a so-called descending triangle. In Elliott wave language, it would be called a barrier triangle, where the B wave and the D wave basically have a horizontal line. And that makes sense in a sense. Well, that makes sense because then you could say, okay, so far we have failed to follow down impulsively. I mean, the move down here doesn't look impulsive so far. And it would allow to give us a shallow E wave, which might end within this fib range that I highlighted here. So if, for example, a count doesn't apply really to the fib level guidelines, then it might be worth reconsidering, and I'm doing this. So we're looking here. I mean, the forecast from the last video worked out. Yeah, we broke down sort of, but that's the micro level anyway. But I think it works much better as a descending triangle. We'll see. Let's see if it breaks down. But if it does, then we could look at another dip, certainly below the 32.1 cent level. And anybody who would then like to get ADA, you know, obviously this is the support area where eventually I would expect ADA to turn around, and an obvious target would be the 61.8 fib retracement, the 30.6 cent level, the so-called golden ratio. And we can also look at it in terms of measuring the length of 1 through 3, go to the high of the fourth. Now again, here the problem is I don't really have the high of the fourth yet, but let's just make an assumption, maybe here around 33.6 cents. Then we've got key targets here around basically 31 cents and 29.3. That's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.